Nobody teaches us how to manage money growing up. Schools skip it, and we learn through expensive mistakes. Sure, you might be doing fine now. Rent's paid, fridge is full, and weekends are fun. But what about buying a home, retiring, and sending kids to college? Tony Robbins breaks down 4 simple but powerful investing rules in Unshakeable, and we'll even give you a 5th rule, one that might be the most crucial, so stay with us until the end. Rule number 1, start investing yesterday. The most important rule? Start now, not next year, not after your next raise. Now, even investing just $25 a week can have a massive impact, thanks to the magic of compound interest. Here's a quick example. Let's say the S&P 500 continues to deliver an average annual return of 10%. If you start investing $100 a month at age 20, by the time you're 35, you could have around $41,000. But if you wait just 5 years and start at 25, your total drops to about $21,000. That's nearly half as much, just because you waited. That's the power of compound interest. It works slowly at first, but over time, it becomes life-changing. Rule number 2, don't lose money. Warren Buffett has 2 legendary rules he lives by, and they've helped him build billions in wealth. What's crazy is that they're incredibly simple, and anyone can apply them. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Why is he so serious about this? Because if you lose 50% of your money, you need a 100% gain just to break even. That's why risky moves like penny stocks or crypto moonshots might seem exciting in the short term, but can be disastrous in the long run. Investing isn't just about chasing big wins, it's about avoiding the dumb losses that make the journey way harder than it needs to be. Rule number 3, low risk, high reward. There's a popular saying in the investing world, high risk equals high reward. But honestly, that's a myth. The greatest investors, like Benjamin Graham, Warren Buffett, and Ray Dalio, don't chase risky bets. Instead, they focus on low-risk, high-reward opportunities. How do they do it? By studying businesses and waiting patiently to buy undervalued assets, especially during market crashes when most people are panicking. That's how they gain an edge. It all ties back to the famous quote, "Buy when there's blood in the streets." Think about it. The 2008 financial crisis, the 2020 COVID crash, even the 2025 tariff escalation, they all scared people into selling, but those who stayed calm and bought in made a fortune. Rule number 4, net versus gross returns. Imagine 2 people each invest $10,000. One pays a 3% fee, the other pays just 0.5%. Fast forward 30 years, both have the same investment strategy, same market performance, but totally different results. The one who paid 3% ends up with $76,000, while the one who paid just 0.5% walks away with $152,000. That's double the return, simply by paying lower fees. That's why index funds are so powerful. They charge tiny fees, yet consistently outperform most pros over time. In fact, 90% of fund managers don't beat the market. Bonus rule number 5, control your emotions. You know the biggest threat to your money? It's not the market, it's you. Fear and greed destroy more portfolios than any crash ever could. That's why Tony Robbins insists on having a checklist, not making decisions based on emotion. Automate your investing. Stay disciplined. Ignore the noise. The wealthy stick to simple, boring rules while everyone else chases hype and loses. Most people will hear this and do nothing. Don't be like most people. Start today, even if it's just $50 a month. Your future self will either thank you or regret it depending on what you choose right now. If you found this helpful, please like and subscribe. Thanks for watching, and take control of your future.